EFG International has published its top 10 convictions for 2023. They have an optimistic economic and geopolitical outlook. And I'm joined by the global CIO for EFG Asset Management, Moz Afzal. Thanks so much for joining us today. Now, EFG predicts a drop in inflation rates to 3% by the end of this year. This is very optimistic. What will drive this drop?
Yeah, so first, thank you very much for having me on. Really the first question is really the base effects of commodity prices and all the supply chain disruptions we had in the early part of 2021 and also 2020. That really hasn't washed through in terms of the inflation numbers. So if you recall, this time last year, oil prices were in the high kind of $100, $120, just as the Russia-Ukraine kicked off. And since then, commodity prices have basically halved across the board, and that is obviously having an impact in terms of reducing inflation. And on top of that, we've seen efficiency gains starting to come as people have started to come back to work.
It's far off from the 10% inflation that we're seeing in Europe and high inflation in the US and even some inflation in the GCC. Does that apply to global inflation, 3%? US inflation primarily. But I don't think European inflation will be too far off that when we finally get to the end of the year. Other parts of the world, you probably see inflation a little bit higher, partly because policy in the US has been much more aggressive than it has been in other parts of the world. Also, bear in mind, China is only just coming out of its COVID malaise, and that will probably have a positive inflationary impulse as we go through the course of the year. So the lower inflation numbers are really for the US and for Europe. Elsewhere, we'll probably see inflation relatively stable, maybe tick up a bit as China reopens. You say that 2023 will be a year when we return to reality in terms of economic growth, and the IMF just today upwardly revised its growth forecast for the global economy. What do you mean by this?
Yeah, exactly that. We've had very high economic growth last year, actually, surprisingly, given all the tensions and the worries that we had around the world. So we think that growth will come back to maybe slightly below trend in the United States, maybe slightly below trend in Europe. But then we see China really reopening and their economic growth coming back up, emerging market growth coming back up. So we're in a much more sort of call it sort of pre-COVID world in terms of economic growth and the drivers to economic growth, and that's where we really hit back. So we're going back to hopefully a normal world compared to this unusual period that we've been through over the last 3 years.
Hopefully so. And you also say that the global small cap sector will present good opportunities. What is your rationale behind this, and when should we start investing?
But there are 2 or 3 reasons. First of all, the war for talent is being quite extreme over the last few years. So larger companies have been soaking up all the talent, soaking up all the top people. And we've seen already how many companies such as Alphabet, Microsoft, Amazon have all let people go over the last 3 to 6 months. And we think that talent is actually starting to trickle down to some of those smaller companies. And that makes it a little bit more easier. But from a macro perspective, there are 2 other drivers. First of all, smaller companies do better in a more normalized inflationary environment. That's the first thing. We've had very low inflation for the last 10 years. And the third thing is really around valuations. So valuations of smaller companies are much more better than they are for those very large companies, particularly those top 10 or 20 companies in the United States.
And where do you see the best opportunities in the MENA region in particular?
Yeah, so we are big fans of the Saudi market, certainly from a top-down perspective. And there are 2 or 3 reasons for that. So as women come into the workforce, which is clearly happening, that has huge productive economic impact on the economy. And we've seen that throughout history. So that's one of the kind of key drivers, we think. And of course, with energy prices, energy complex very high, as we know, that is obviously having a big impact in terms of trickle-down impact in terms of money supply and of course those big infrastructure projects that are kind of well known to the public. So there's 2 or 3 really good structural reasons why we just like the region.
Well, thank you so much for joining us today. Global CIO for EFG Asset Management, Moz Afzal.